Income Tax 2020 Business Expenses Introduction. Come in, relax with Income Tax 2020. Business Expenses Introduction. When thinking about business expenses here, we're primarily going to be thinking about a Schedule C type of business, contrasting that to, say, W-2 type of income, although business expenses and the concepts related to them could be applied to other types of business entities, such as a C corporation or an S corporation or a limited liability company. We're going to be comparing and contrasting, or I think the easiest way to think about business expenses is to compare and contrast with W-2 type wages, meaning being an employer or having a sole proprietor type of business. Because you might think that we could have business expenses for a W-2 type of business, and it is possible to do so. However, if you have a W-2 type business, the thought is that most of your expenses, the things that are going to be necessary in order to generate revenue for the business, has been provided to you by the employer. And therefore, there's a lot less that you can deduct if you're an employee, even though you might have expenses that would be basically for your business expenses as an employee working at a company. But a business expense related to a sole proprietorship then could be thought of something that would be on the Schedule C. And if it's on the Schedule C, it's basically a deduction, right? Because the Schedule C is going to be another income statement. In other words, when we think about the Schedule C income with regards to our income tax equation, we're basically thinking about the income line up top. So you're kind of thinking that's like the gross income line. Then we're going to have the above the line, below the line deductions to get to the taxable income. But of course, the income that's going to roll into the top line of this equation will come from the Schedule C, which is basically another income statement, having income line, expenses line to get to basically net income. So what rolls into the top line here will be basically the bottom line of the Schedule C, basically the net income of the Schedule C. And that means that all the expenses on the Schedule C are basically deductions. Those are the business expenses. So obviously the general rule being that if something is being consumed in order to help you generate revenue in the business, it should be an expense. And that should kind of ring true. It should kind of make sense, because obviously if you think about the Schedule C type of business, you can think about the reporting form for it for the income might be something like 1099s. Now you might not get a 1099 for all the revenue that you have, but you can imagine the 1099 forms reporting the gross revenue side of things. And if you imagine that you got revenue, say for 100,000, let's say in our example here, or 125,000 of revenue, in 1099s, and someone 1099s you on it, or they didn't, you have the revenue here, then it wouldn't really be fair to be taxed on that amount, because depending on the type of business, you may have had to expend a lot of money in order to generate that revenue. So for example, if you had inventory or something like that, you had to have the inventory, you had to pay for the inventory in order to generate the revenue. So it doesn't make sense then for us to be saying that you should be taxed on 125,000 if after the necessary expenses, your net income for business is really only the 100,000. That's what you should be basically taxed on. And that should kind of make sense. I think that just intuitively makes sense to most people. And therefore, anything that's basically the general rule for expenses then, if you're on the Schedule C, is anything that you needed to expend in the process of the goal of generating revenue, which is going to be the thing that you're going to be taxed on, net income, should be expense deductible on basically the Schedule C. That's going to be like the general rule. Now remember, when we're thinking about the Schedule C with regards to the 1040, we have the Schedule C, which will flow in the bottom line of the Schedule C, then will flow in to the Schedule 1 in the Part 1, and then it'll flow in here. So here's the 100,000 that was the bottom line on the Schedule C. And then we could have the payroll taxes, or not the payroll, the Social Security and Medicare, which are self-employment taxes, similar to payroll taxes. And then half of that could be deducted on page 1 of the 1040. And then we also have the standard deduction here, which isn't really tied to the Schedule C or business, but standard deduction. And then we could have something like a qualified business income deduction as well. We're going to be focusing here on the Schedule C, because that's where typically you'll have the expenses. You can see the expenses below. These would be the general categories. So if you actually just simply take a look at the Schedule C, then you can get an idea of the normal type of grouping of expenses. If something is not on the Schedule C, it doesn't mean that it's not a legitimate business expense, because again, the things that we consumed in order to generate revenue, you would basically think of as business expenses. The most standard categorizations and most standard wordings of them are going to be on part 2. But if you're in some kind of business where you have to spend something on something that's not here in order to generate revenue, then that would be a business expense just as a general rule if it was consumed to generate revenue. And this is kind of the baseline rule to kind of justify many different types of deductions. In other words, we have an income tax. They're going to tax us on the income. We should be able to deduct those things that were necessary in order to generate the income possibly. So if you're like talking about capital gains or like the sale of stock or something like that, then often we might have the cost of the stock as part of what we have to take into account with regards to what the gain will be, how much we have to include then in income. So that's kind of the general rule for an income tax in general. And then, of course, we add a bunch of other things that are for other reasons, like charitable deductions and home mortgage interest and whatnot, which obviously have a different type of incentive to them, possibly incentivizing people to be able to build homes, or possibly being influenced by the people that build the homes, or possibly, to incentivize people to put money into charity and whatnot, and those types of things. But the most baseline kind of reason, if you have an income tax for something to be deductible, you would think then would be that if it was something that needed to be consumed in order to generate the revenue that you're going to be taxed on, because you would think that you should be able to be taxed on the net income, not on the gross income, because the gross income could vary greatly between the gross and net income depending on the type of industry. And of course, that basic rule rings true, or still is easiest to see basically on like a business type of return, and the sole proprietor business being the Schedule C. Okay, business deductions or business expenses. You can deduct the cost of operating your business. These costs are known as business expenses. These are costs you do not have to capitalize or include in the cost of goods sold, but can deduct in the current year. So we'll typically deduct normal business expenses in the current year. To be deductible, a business expense must be both ordinary and necessary. Now, this is, of course, where the tricky components come in here, because then you got to determine what type of expenses are applied to the business. And this is why whenever you talk to an accountant or a bookkeeper or a tax professional, they're always trying to say you need to have a very clear line between your business and your personal items. And they would recommend that you have a separate checking account if possible, recommend that you have separate set of books, record your books in QuickBooks and whatnot in separate accounts if possible, or have some way to distinguish those two as much as possible, because the ones that are going to be deductible are ordinary and necessary. And then, of course, you can imagine gray area there as to what kind of expenses are ordinary and necessary for different types of businesses. And obviously, from the IRS standpoint, if something looks fun, they're less likely to think it ordinary and necessary. So, I mean, for example, if you are a producer of movies in some way, shape, or form, and you write off all the movie tickets that you go to movies, all year, and you say, well, that's research for my movie production business, may well be, that could quite well be the case, but, obviously the IRS is going to be saying, hey, that sounds kind of way too fun, to be like a deduction. It might be a deduction, but you'd want to make sure that you have the justification for it. Obviously, if you're doing like accounting work and we're doing tax returns and we're writing off like tax software, then there's probably not too much question as to whether or not that would be something that would be used for business or be ordinary necessary for the concept of generating revenue, as opposed to something that would be for personal use. So if you're in an industry that can tend over towards having things that could be considered personal, you're going on trips for photography or something like that, then again, you want to make sure that you're kind of delineating the business sides and being able to document them well in case of an audit. So an ordinary expense is one that is common and accepted in your field of business. A necessary expense is one that is helpful and appropriate for your business. An expense does not have to be indispensable to be considered necessary. So to say necessary, it doesn't mean like if you didn't have this thing, your whole business would go under. That's not what they're saying as necessary. They're saying a necessary expense is one that is helpful and appropriate for your business. So necessary not meaning like water to a human being. If I don't have it, I'm going to die. If I don't have this, the whole business dies. But necessary in that it's going to be helpful and appropriate for the business.